Hey guys, welcome back to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today, we're going to be going back in time, back to 2013 specifically, when Apple was trading at $16 post split. Back then, it was around $400, but nowadays, values it was 16. So, what if we could create a stock screener to look for companies that were the same caliber as Apple in terms of gross margins, earnings, sales, profitability, quarterly sales, etc. A lot of different things. So we're going to go back in time. We're going to look at Apple's parameters, financials, and create a screener based on that to see if we can find potential stocks today that could mimic what Apple has done from 2013 to today, which is astronomical. So we'll look at that exactly to see what the actual gain was. And yeah, we'll save that screen and then we're going to go from there. Let's jump on in. All right, we are on google.com, and the first thing we're going to do is we're going to actually look, we're going to pull up the Apple stock history, and we're just going to want to see when we had around $16 a share. So let me move my big old head. All right, I'm going to hit max right here. And looking down here all the way back in 1983, it was 9 cents. Very cool. Geez, 190,000%. So let's go to 2013, where the stock price dipped from about April, I guess January to June. January to June of 2013, the stock price was around $16. What has it done since then? So 1607 to, let's do last week, 1,026% in 10 years. Okay, now we're going to try and find a stock that has similar parameters to what Apple did. So you might be asking yourself, okay, Ryan, how do we travel back in time? How do we see what Apple used to be? Because obviously it's a juggernaut, insane monster now. Well, there's this really cool website called the Wayback website. So we checked Apple. We want to look from January to June of 2013. We are at the Wayback website machine. This website is amazing. So I already have the URL, but that was for Tesla. Let's look at Apple, AAPL. And this was 2013, so I'm going to click on the year 2013 here. And basically any time from January to July. So I'll just click March 10th. I feel like that's right in the middle. Ish. Ish. Okay, so just to confirm, I don't see any dates on here. So what I want to do is I want to go down here, and you can see literally like every day there's a new article that mentions Apple. So down here we can see March 8th, 2013 right here. So I know I'm in 2013, and the price back then before the split was $431.72. We have 442 right here. So that's awesome. What are the next steps? Let me drink some coffee real quick. So we have this information here. We now need to go to finviz.com. It's an amazing website. I highly recommend you become familiar. We're going to go to Screener, and we're going to set up our parameters based off of what Apple had. So looking here, we can see that the market cap was over $1 billion. It was at 405 billion. So market cap, I am gonna go to it. It was over 1 billion. So let's do small. We want to do over. So over 300 mil. We could do mid over 2 billion because Apple was 4 billion. Was it 4 or 400? It was 400 billion. 400 billion. Let me update this. So we're going to do large caps over $10 billion here. All right. We went from around 7 or 8,000 stocks now down to 784 right here. There's Apple. All right, let's go back and look here. We can see that Apple did pay a dividend. We're not gonna select that just yet. Let's look at price to earnings. So price to earnings at 9.79. So if we go here and we go to PE, we want to go to under 15. All right, we went from 784 to 202. So this means that the stock is reasonably priced, which is good. Do we have a forward PE option here? Forward? Yes, we do. We also want this to be under 10. So basically a PE of under 15 means that the stock is priced correctly, like in terms of finding a stock that can appreciate. Forward PE means that in the future, the stock is going to be even more undervalued by having these selections. So just to make sure, the PE is under 15, correct? And the forward PE is under 10, perfect. The quick ratio right here is over 1, meaning they have adequate cash. So we're going to go back here and we're going to go to quick ratio over 1. 107 stocks now turns into 25. Wow. All right. Debt to equity is 0 right here. So we're going to go back here and long-term debt to equity is going to be under 1. Let's do under 0.3, just being a little conservative here. And then debt to equity is also under 0.3. Wow, we only have 6 stocks here. Crazy. All right. We also want EPS this year over, let's see, EPS. What were they forecasting? So EPS next year, they were forecasting 13.8. So let's do over 10%. So our six stocks went from 6 to 4. Let's remove the long-term debt to equity because I think that is kind of hindering us at the moment. Okay, we have 9 stocks now, not much of a difference. So now we want to do gross margins over, let's see, gross margins over 40%. That's huge. Our 9 stocks went to 4. And we want profitable, profit. Is that the only, let me see, profit? Okay, it is only selection. We want it to be over 0%. Over 5%? Yeah, over 5% is fine. Okay, we're still at 5 stocks. Shares float is really high here, so we're not going to touch that. Target price, that means this target price is 630, so we want the stock price right here to be under the target price. Below price. Whoops, above price is what I wanted. So this target price is going to be above the current stock price. Okay, let's look at another growth aspect. EPS past 5 years. Let's look at that. Let's do EPS growth past 5 years as positive over positive. Still at 4 stocks. Earnings sales past 5 years. Let's do positive as well. Sales growth past 5 years positive. Are we going to remove a stock or two here? Nope, still 4 stocks. All right. What else can we do to let's look at growth. Quick ratio, debt, EPS 5 year. This year's over 60%. That's insane. EPS growth this year over 30%. We'll probably knock one off. No, nothing. Whoa. Do we have some real deals here or what? Um, I think we captured all the growth metrics that we want. And I think we might be able to get rid of two. Let's see. So market cap is good. Yes, these are good. These means it's reasonable. Growth. Target price is good. Net profit. So these are all good. All right. We have 4 stocks here, you guys. Should we look through them and see what we get? I think we should. I think we should. Um, but I'm gonna throw a twist. Let's look at Apple from inception to 2013. So, micro trends. Let me see. Let's see if I can do this. AAP. Let's see if I just did this URL. I did. Okay. So, we're going to look at Apple's price average from inception to 2014. How about that? So we can see what Apple had done from the very first day all the way till when we're mapping it, and we'll do the same thing with these 4 stocks. It's just extra data to analyze, which is perfectly fine with me. All right, so we've got this ready here, and then another twist on top of the twist that I already have. We're going to look at the last 10-year returns of these stocks. So we're going to have Apple as our one we're going to look at because we're looking at Apple. So Apple, on average, over the last 10 years, has provided a 29.57% return. That is amazing. Okay, let's get Apple's information all right here. This website is macrotrends.net. And so now I'm going to go here. So we have the year, so 2014, which is right here, all the way to inception. All right, we have all of these dates highlighted. Now we're going to look at the average right here. Should we get a drum roll? Who wants to guess? I'm going to guess 30% on average. Oh, 35. Okay. So from inception to the measure date, 35%. For the whole Apple from day one to day, which is June 10th, it's 34%. How crazy. All right, we have Apple. We've now got a blank sheet for the first stock. The first stock we have is CTRA Energy, trading at $24. All right. All of these financials look fine to me. Gross margin 88%, profitability 45%, 8.5% dividend. Is that sustainable? I don't know. Institutions are selling a little bit. EPS past 5 years, 79% and then 38%. What the fudge? Okay, I'm in for this ride. I'm super excited. Okay, CTRA here. CTRA. All right. All right. Wow, it's been around since 1991. Very cool. And we're bringing it into here. And we're going to go to 2014 from 1991. Average is 20% from inception to 2014. But so that's 1991 to 2014. How about holistically? If we take everything into account from inception to today, it's at 15%. Half as strong as Apple in this type of environment. And the average 10-year return CTRA, it's actually returning a negative 1.17%. We do see some sales here in 24 and 27 range. I mean, the company looks really strong, in my opinion. Let's look at the monthly chart. Yeah. And then what was Apple's chart looking like? Kind of like the same. No, not really. Um, so I mean, it's undervalued big time right here. I want to do my quick formula on the calculator to see what we get here. So we have everything is in billion. No, the shares float is not in billions, unfortunately. So 915 billion plus income of 413 billion. That's insane. They have 9 billion in sales and 4 billion of that is just straight income. Plus 17 billion 890 million. All right. 17 billion. Yep. It's a big number. Let's remove debt, add cash, and just really quickly, the revenue is growing, gross profit is growing, net income growing. Okay, let's add the cash. 673 million plus 673 million flat. Debt, billions? Yes. Minus 2 billion 198 million. Yep. 2,198. Okay, total liabilities 7.4 billion, total assets 20.15. This is beautiful. In my opinion, this is beautiful. That's almost a 3-to-1 risk reward, not risk reward, 3-to-1 ratio. So that means liabilities could triple almost, and it would assets would cover it. So almost 3-to-1 ratio. That's beautiful. So now we're going to take this number and divide it by 749,430,000 right there. Stock price of $39. It's currently 24. Undervalued currently, and this is saying that it's also undervalued in the future. I think I want to own this one. I think I want to own this one. Here's what I'm gonna do. While I'm doing this video, I'm gonna make a game plan in the back of my head and figure out how I can get some of these into a portfolio, drop some money in at one time, and then just track it. I think that would be kind of fun. Okay, so CTRA, I like it. I like it. Um, I like it. I'm just gonna note it down over here so then I can just stop talking about it. All right, moving on to the next one. EOG resources. I'm excited. I feel like I'm going to try and find the next Apple, but three of them are gas and oil, but I'm hoping there's some type of sustainability mixed in. Okay, so, okay, this is good. Um, Looking here, let's run our numbers. Or wait, EOG, let's look here first. So this is from inception to 2014. Whoops. They were also 1991. Okay. All right, 2014 here, right? Yep. Average is 20%, so 10% less than Apple. What about holistically? I'm going to say 20%. 15%. Okay, so about half as Apple again. All right, let's look at the last 10-year returns. EOG. I'm going to say 7%. 8.56%. Not bad, not bad. Apple was pushing, I think, 30% by that time, so a little bit behind the curve, but let's look at the data. So, let's run the numbers. Okay, so we have billions over here and then millions over here, so everything has to be longhand, so I apologize for how long it takes. 27.6 billion, correct, plus 9,390,000,000, correct, plus 65,700,000,000. Jeez. All right, let's go add cash and remove debt. Let's just look here. Revenue growing, nice. Wow, gross profit, beautiful. Net income, wow. Um, Very cool. Okay. Are they buying or selling here? CEO bought options. COO sold some, but it could be because he's going to be buying options. So whatever. Okay, total cash is 5.9 billion. Nice. Plus 5,972,000,000. Okay. Debt, total debt, 5, so minus 5,078,000,000. All right, and then I just want to look at their total liabilities to assets. So liabilities, 16.5 billion. Total assets, 41.7 or 41.3 billion. So that is a 2.5x ratio of assets dwarfing liabilities. That's good. And let's take this divided by 581,970,000. That's a share price of $178, and it is currently at 116. I like this. It is an oil company. So they do explore, develop, produce crude oil, natural gas. Wow, the company was formerly known as Enron. Wow. And our institution's buying or selling. Let's just check. So this is the Fintel EOG. So old data shows that institutions own 89%, and new data shows that they own 111%, meaning they're buying, meaning I like this a lot. And if we look at the bigger picture overall, ooh, this is a big bull flag, you guys. Flagpole right here, flagpole, flag being built, and then a move like this. If it plays out, wow. Okay. Okay. I like this one. But I can wait to buy this one for sure. Wow. All right. I would buy this one as well. Okay. And next up is EQT. So let me just get a blank spreadsheet ready. EQT. All right. Looks good so far. Okay, let's do our numbers here. They make 10 billion 740 million. 10 bill 740 mil, correct. Income is 4 billion 510 million, correct. Market cap is 13 billion 390 million, correct. Let's go add cash, remove debt. First, let's look at their revenue. Wow, revenue is insane. Went from 3 bill, 7 mil bill, 10 bill. What? Net income is crazy. Oh my God. What the heck? This is a natural gas mainly. What the fudge? It was founded in 1878. Wow. Okay, cash, they went from 113 million in cash to 1.4 billion in cash. What? So plus 1 bill, 458 mil, 640 thou. Yep, that is correct. And then we're going to minus the debt, which is right here, 5 bill in a debt. That's not good. Minus 5 bill, 678 mil, 970 thou. Yep. All right, let's just take a look. Total liabilities 11.4, total assets 22.6. They are not even 2-to-1 ratio, which is a little concerning. But they do make so much freaking money. They have little debt. Okay. So let's take this and divide it by our shares float, which is 358,630,000. Share price should be 68, around 68. It's currently 38. Nice. Okay. I like this one. I skipped a couple of steps here. I apologize. Let's just look at the chart on the long term real quick. All right, it's making a reversal. So let's look here for EQT. And let's see what the average return is over 10 years. I want to do this one first so I can try and guess it. So when you're on macro trends and you select something, you want to click the prices and then the stock price history to get the table of returns for year over year. I'm going to guess this was public before Apple because it was in business since 1887. Let's see. 1988. Wow. Okay, so they're not. Apple is older than them in terms of being listed, I think. Okay. So let's go back all the way to 2014 to 2014 all the way down. 16.18%. And then if we go and look at holistically, I'm gonna say 19%. 13.88. Ooh, okay. And let's look over the last 10 years. Negative 0.77%. All right. So, I mean, this one looks really dang good on paper. What are institutions doing? I'm gonna say they're buying, man. They have to be buying. This is like a $38 stock trading at 68. They got to be buying. The old data shows that they own 99%. I guarantee they own over 100%. 108%. Yeah, yeah. So, yeah. Pretty crazy, right? All right. Um, again, I would own this, you know. I feel like it's so much oil and gas. Out of these three, I think my favorite is it's either I really like CTRA and EOG. But now let's look at Nokia. That was my first brick phone back in 2006, 2005, 2006. All right. $4 stock. Okay. So Nokia let's go here first. Let's get the stock price since inception. I'll just type it in over here so it's ready for us. Oh, I couldn't find it. I think it's because it's foreign. We'll figure it out. All right. This goes all the way to 1995, which is fine. Going here. New sheet. All right. 2014. Whoa, my bad. 27.86% from 1991. I'm sorry, 1995. Was it 95 or where did it go? Yep, 1995 to 2014. That's right up Apple's alleyway, you know? And then we can figure out the last 10 years from here. So 2023 to 2013. Last 10 years was 8.5%. How lame. But it's better than the negative of the couple other stocks. So that's a bummer. Let's plug away at this data here. 27,360,000,000 in sales. Yep. And 4,640,000,000 in income. Yep. Market cap is 22,660,000,000. Yep. Let's remove debt and add cash. Let's look here. Okay, total revenue is 25 bill. Wow, it's growing nicely. Net income is strengthening as well. Nice. Balance sheet total assets 42.9 bill, total liabilities 21.6 bill. So that's 2-to-1 ratio. So I like that a lot. No, wait, it's not. 21.6 is 43. Nope. It's a little bit less than 2-to-1 ratio. So that's so total cash is 5 bill. So plus 5,467,000,000. Total debt is 5 minus 5,519,000,000. All right, and take that, divide it by 5,557,000,000. Yes, right there. $9 stock. So basically double what it is now. It's pretty crazy. That is pretty crazy. So as we can see, the chart's pretty boring. What I want to check. So out of these three stocks, I'm not a huge oil non-renewable person, but if I had to choose, I would have to choose one of those other stocks, CTRA, I think, or EOG. So yeah, what we can do is I'm gonna go to portfolio and I'm gonna create a new portfolio here. And we can add these stocks. So it was, let's see. Where? Here we go. So CTRA, EOG. And EQT. Nokia. All right. And we're just going to buy one share of each. All right. Get today's price, get today's price, get today's price. We're going to call this the Apple Mirror. Let's change it to Apple. $16 Apple scan. And we're going to save the changes. All right, so we now have a mock portfolio here, just to kind of watch it. All of these companies are okay overall. I do want to see what Apple was worth back here. So we're gonna do a bonus here and see what Apple was actually worth. Maybe it was overpriced. Okay, so they do 164 billion, 690 million in sales. Jesus. Plus 41 billion, 750 million. Yep. Plus 405 billion, 410 million. That's crazy. And then no debt. Wow. Okay. Uh, they don't have the balance sheet from here. But as we can see, they have no debt and they have some cash. So let's just take it for what it is. And we're going to divide this by 938,760,000. $651 stock price. You can see the target price right here is 630. So my calculation was still pretty good back in 2013. If we remove the large over 10 billion, we look at all stocks. Let's see what we get. Now we get 21 stocks. And let's look at market cap highest to lowest. All right. So we checked these four out. Another oil and gas, oil and gas, oil and gas, oil and gas. Tegna, weird. Page Suro Digital. Let's check it out. Trucking, Arc Best. Let's check that out. Entertainment, Sinclair. Let's check that out. Specialty chemicals, and I just did Bassett Furniture. Bassett Furniture is a good one. We'll just stop there. So PAGS, interesting. It hasn't been around for a long time, and yeah, it doesn't look too good. So let's crunch some numbers here. Let's first look and see what it does, actually. Do we want to waste our time? So PageSuro provides financial technology solutions and services for customers, entrepreneurs, micro merchants, and small medium. Oh, very cool. Very cool. Okay, okay. And since we're down here, let's just look at this. Revenue is growing. That's wonderful. Net income is it's getting stronger. Very nice. Very nice. Cash and short-term investments 2.9 billion. Total assets 45.3 billion. Total liabilities 33 billion. So again, not the 2-to-1 ratio that I like, but it's okay. You guys, let's look at this. This looks great. Unless I'm tripping on drugs. This looks like a great historical time to buy this as well. Unless they're like stealing from their shareholders. Offering? No, they're not. Okay, I like this. I like this. Okay. Let's do this. Okay, they make 3.12 billion. Good for them. They have positive income of 304,100,000. Correct. Plus 3,260,000,000 market cap. Correct. Right? Yes. Okay. Let's remove debt, add cash. So again, debt is no debt. Come on. What? Did they just pay it off? That's wild. Other liabilities, do we want to take that away? I don't know if we do. Let's not add the cash. Cash is 2.9 bill, total liabilities is 2.1. Let's just leave those out of the equation. I just want to be conservative here. Just because this looks really nice. Okay, so this divided by 200 million, 200 million, 30,000. $33 stock price, currently trading at $9.95. This reminds me of Square or Block, you know, how you can swipe your card at little merchants. So I want to see institutions buying here. I want to see institutions buying here. Please. I mean, they have to be buying here. This looks so attractive. Why would they not be buying here? It says they own 63%. New data, old data shows 52%. Dude, this is crazy. This is crazy. What? Oh my God. Okay, I do see some people, like-minded people. Let's go here real quick. Let's go here. This website, don't take what anything anyone says on this website for a grain of salt, but I see people talking about this stock and it's very under under known, under it's very under the radar. Now I'm whispering because I don't want people to hear me. Pegs? Oh my God, I'm so excited. What are these people talking about on pegs? Oh my God. You guys, this is crazy. This. Okay, this company has a forward PE of 1. What am I missing? What are you missing? Come on. Meet Virginia. Yeah, yeah, yeah. Okay, let's see what people are saying. Uh, they missed currency conversion. I don't know. Wow. Okay, so is there money in Brazilian or USD? Oh, it's in Brazilian, dog. Oh, BRL to USD. Dang it. Okay. All right. Um, I still think this is insane. Um, Very cool. Let's just crunch the numbers here. I'm already in so deep on this one. Let's just crunch it. So 3.26 billion here for market cap. 326. 123, 123, 123. Let's see, 123, 123, 123. That's million there. So I think I need to take 123. Okay, 123. So this is 326 million. So one more zero. So that's 668029354. That's the market cap. Income is 304 million. So 304, 123, 123. Plus 6229471 plus 3.12 billion. 312 123 123. Okay, that's 312 million. Add another zero. Perfect. Okay. So plus this is their sales plus 639340977. Perfect. Okay. That's their top. And let's go add the no, we're not adding the cash or um, debt because yes, that's right. That's right. And we're going to divide this by 200 million. So a share price of $6. Okay, this is making sense to me now. Um, yeah, I still like it. I'm crazy. And just to double check, total revenue 15.5. Oh, you know what? You guys, my first way around was right. Let me explain why I just learned something with you guys on camera. I apologize. Okay, you see net income right here? It's at 1,500,000,000 and whatever. And when I go up here, net income is 304 million. They're doing the conversion on this table right here. So if I type in 1,524,000,000, 123, 123. It comes out to right here, 312 million, which up here is 304 million. So I'm a ding dong. This is already pre-converted. So we're gonna start over. 3,120,000,000 plus the 304 million in income, 304,100,000, and the market cap of 3,260,000,000. All right, divided by 200 million shares outstanding, and boom, $33 stock. Okay, I do like this. Institutional ownership went from 52 to 63. Who bought? I'm gonna guess Vanguard, BlackRock. Uh, okay, Celebra added this Melvin Capital. Ooh, Melvin Capital, they're famous. They sold everything. Universo decreased. Capital World increased. Wow. FMR increased substantially. Capital Resource sold, and Invesco sold a bit. Who's been buying? Oh my God. I don't know these people. Lazard, Crane, Janus Henderson, Blackstone. Blackstone sold. BlackRock bought. Deutsche. Vanguard bought. A lot of stuff here, but overall I like this stock. I do like this stock. I do like this stock. This is one that could be Apple like, in my opinion. We'll go back to Apple over here. They're at 164 billion in sales. Pegs, it's not there, but give it some time. Give it some time. This is great. I can't believe I found a stock like this. This is a long-term hold, by the way, because the shares float is over 200 million, which is a lot, meaning it's gonna take some time to make a move. So I like that we found that together. Let's look at this one. You can tell it's gonna go down because it couldn't break up and it's falling through here several times. So it's trucking. I do not have anything against trucking, only against oil. So let's do some math. 5,100,000,000 in sales, great. 247,500,000 in income, and market cap is 1,970,000,000. Perfect. And let's go add cash, remove debt. This is a US company. Lots of selling. Yeah, kind of. Revenue. Ooh, revenue's kind of dinging down. Profit dinging down, net income up. It's good. Okay, balance sheet. They have 21 million in cash plus 21 million. Oh, 2, 1, 2, 3. Yes. Debt. They have 264 minus 264, 620. All right. And let's divide this by the shares float, which is 23,440,000. $301 stock. What am I missing? What am I missing here? I don't think I'm missing anything. So, okay, I think I see. But I think this is purposeful. So you can see earnings per share over the next 5 years, they have minus 1.5%. But if you look at earnings over the past 5 years, it's at 55%. So they could have guided that in the future, they're not going to make as much, but they could be doing that to kind of save their own rear end if they do not meet what they have previously done before in terms of numbers. So they've set the bar so low for themselves that I think they've crashed their stock from 124 down to 65, little run, and now back to 85. ARCB, let's see, ARCB. And let's look here, ARCB. 10 years, 16.8%, that's good. And it looks like there is 91% ownership. This is like a $300 stock trading at 85. I'm guessing insiders are buying. Institutions, I'm sorry. I'm thinking institutions are buying. So institutions own 106%. Last was 91.5. That's huge. So trucking, I don't know anything about the trucking industry. So I don't know how to feel. I mean, on paper, I like it. And I like this setup right here. We have the flagpole and then the flag right here, this rectangular. Imagine a flag going down here and then a boop. So I do like this stock. Apple is a juggernaut at 100 billion. Can trucking get to 100 billion? Let me see. Let's go to screener. Is there any trucking industries bringing in 100 billion? Trucking. Okay. Trucking with market cap has to be over 100 billion. No, Old Dominion is the highest trucking, and then we have the one that we're looking at. ARCB, it's only at 1.97 billion right here. But wait, sorry, right here. It's not even on this screen. What? Why is it not here? Industrials and then trucking? Come on, man. Okay, that's annoying. So do I have to go to industrials over here? No, industrials trucking. I have it sorted by market cap. I don't see the ARCB one. Oh, it's right here. It has a $2.1 billion market cap right here, but over here it's 1.97. They might be updating FinViz data right now. That's so funny. We've got the upper hand. Okay. So in terms of trucking, I mean, ARCB has a price to earnings of 8.75. So I don't know. I just don't know. Will trucking become a $100 billion industry? Let's just Google it. Will trucking become 100 billion industry? The semi-fully autonomous truck market size will be 88 billion by 2027. Okay, so who the hell is doing autonomous trucking? Autonomous truck stocks. Oh, there's the ETF. What? What? Okay, here's some stocks. I'm so sorry for going down this rabbit hole with you guys, but okay, so they just dropped 4 stocks here. Do we go down the rabbit hole? Fudge, I don't know. Let's look at EVAV really quick. EVAV? Autonomous vehicles? Seriously? It's so new, but it's at the bottom. Oh my god, it pays a 7% dividend? What the freak? What the freak? What is in this? We gotta, what is it holding? Blink Charging, Brog Warner, ChargePoint, AVGO, Fisker, Goldman, Lucid, Nikola. It's holding Nikola? Neo? Wow. It's barely holding Tesla? Dude, this is. I'm disappointed whoever put that fund together. We're not going down that rabbit hole, but let's just look at TSP really quick. We'll just look at these 4 stocks, and if they're penny stocks, we're moving on. Okay. Dog, this is exactly what I thought was going to happen. They make 9 million, but they're losing 449 million. Give me a break. No. Okay, next is Northern Genesis So NGAB. If this is a shell company, I swear. NGAB? Did I get that right? Am I dyslexic? NGAB. Yeah, so it's nothing. So HCIC now. No, it's a holding company. No. Last is RTPY. All right, well, I'm glad I went down that rabbit hole with you guys because it looks like it's nada. I think Tesla might be the closest, but I do like ARCB. Um, you know what? I really hate to go on a rabbit hole with you guys like this, but I just want to see if they mention autonomous in the report, the 10Q. I am so sorry. We're going to be done with this very soon, very soon. Annual report. No, we want corporate governance, maybe? Filings. We want filings. Yes. And we want 10K. PDF. 2022. Where's 2023? Anyway, we're going to look for autonomous. No. Damn it. About self-insurance, okay. Self-move, competition. They don't have the word autonomous in here. So, I really, really, really feel like we want to see the word autonomous. We're going to look at Old Dominion and TFI and Night Swift. I just want to see if they have, and we'll look at all these ones really quick. Okay, I looked at all the companies that are above the one we were just looking at. And again, it'll be really quick, I promise. So Old Dominion, I think it goes by its name. It's old. So I'm just gonna go to the website. I'm gonna look for the 10K. We're just gonna do a Control F for the word autonomous, and then we're done. All right. Investors. Q3, we want the SEC filings. SEC filings. All right. 10K. Form, we want the 10. The 10, where's the 10? 10Q. Here we go. Let's see if we can find the 10K. 10K. Okay, let's look at the 10Q and the 10K. Okay, the word autonomous, auto. The word auto's not even here. Come on. Here we go. Oh my God, seriously? The word autonomous? What a big bummer. What growth? Let's just growth. Okay, it's in here 15 times. No autonomous. Okay, that's freaking annoying. See here, autonomous, auto. Okay, no autonomous. What a bummer. Old Dominion. Okay, next one again. I'm sorry, guys. We're just going down a quick rabbit hole. I just want to find autonomous. 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 Investors. Come on. Where are their SEC filings? Reports. I think they post into CTRA, not the SEC. Dang it. We'll find it. We'll find it. Okay, 2022 annual report. Okay, it's long. That's good. Okay. Let's just go. I just want the, if there's any words to be captured, we're on the last page. So any ingestion. Okay, so let's do auto. All right, it's found 10 words. Okay, they have auton. Ooh, they have 4. Okay, we're in business. Okay, so they're talking about autonomous, but in what loan? Oh my God, is this the risks? God dang it. Okay, guys, I'm gonna skim a little bit. So this is competition. They have autonomous and competition. Okay. And credit facilities. The company's indebtedness may increase. Okay. Increased prices for new revenue equipment changes and equipment on and future use of autonomous tractors. Okay, so they're at least open to getting the tractors, but it doesn't sound like they want to be the creator, which is fine. Okay. Um, this is the same paragraph. They talk about autonomous tractors. I don't know how I feel about that. Damn. We're going to pass. All right, here's another Night Swift, Taylor Swift. Okay, perfect. Investor SEC filings right here. Dang it. Perfect. Okay, this is sweet and simple. Filing type, give me your 10-4. Ooh, there's a lot of statement of ownership. Are they buying stock? Buy. They're selling. I don't know about this whole trucking industry jargon baloney we got going on. Oh my God, so much selling. Here's the 10Q. Okay, give it to me. Give it to me, Nini. Okay, PDF. If I can find the 10Q really quick, or 10K, it's gonna be, here it is, yes. Okay, we've got what we need. Auto. All right, we have 28 results. What I put? Okay, we have a lot more. Okay, go. Auton? You've got to be joking me, man. Okay, there's one word. Okay. One word. Into risk. Oh my God. Increased prices for new revenue, blah, 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 and future use of autonomous trucks. So it sounds like they're willing to buy autonomous trucks. That's better than autonomous tractors. I will give them that. I like that. I like this. That was KNX. Okay. Is this the same dang thing? Close. It says there's no words in here with auto N. Should be one. Let's see. Let's load it up. Okay, auto. Should be more than three. There's only 3 words named auto in the whole thing. That's so weird. Okay, so this was published. This was published in March 2023, and this was published December of ending 2022. Okay, so I like that they have. Oh, this is the annual report. So this came. Okay. So they at least mention autonomous trucks. I like that. So we like the K and X one. And I'm so sorry we are just like running so long into this video. Okay. And SEC filings, and we want autonomous. Give me the 10. Here's the 10Q. I'll take it. Give me the 10K. Give me the 10K. ARS 10K. Here we go. All right. Saya. Don't let me down. Okay, 10Q. Just go through the bottom. Okay, so we're gonna go Control F, auto. There's no word auto here. No word of auto anywhere. What about United States? There's 2 United States listed. Okay, it's crawled the website. Auto. Oh my God, they're a trucking company. Don't mention the word auto. Okay, let's check this one. It's crawling. It is crawling. No mention of the word autonomous. Okay, okay. Okay, 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 okay. XPO. I actually had an interview for them a long time ago. Okay, XPO. I feel like if anybody, they're gonna say the word autonomous like 3 times. At least. Investors. Where's the SEC filings? Did I miss it? View all, yeah. Okay, well, look at the 10Q. I don't like how 10K. Okay, I'm gonna guess they have the word autonomous at least 3 times in both documents. At least. Okay, auto. Oh crap, they only have the word auto once. No autonomous. What about self-driving? Wow. Nope, okay. Wowzers, you guys. I can't believe this. Okay, got more hits. No autonomous. What? Let's see. I'm just. Okay, I'm searching for the word. Oh, look at this. XPO CEO says self-driving trucks are coming, just not anytime soon. That was 2022. Okay. So, okay. We need their where. Okay. Let's look at Old Dominion. Freight line. First industry. Okay. This is from 2018, by the way. 2022. Okay. End of 2022. Okay, so let's just take a peeksy. Okay, so yeah, K and X, like we were talking about. Um, so yep, Old Dominion is obviously number one. Night Swift. Okay, so okay, Werner, the way that they do shipments. Okay. So old ODF, so these three are top for sure. Wern, ODFL, and Night Swift. Okay. Jesus, that was a freaking rabbit hole, you guys. I am so sorry. Okay, so these three stocks. We have Wern right here anyway. I mean, ODFL. Can ODFL, Wern, or Night Swift be an Apple? That is sales of over 100 billion. The whole trucking industry itself is going to be 88 billion divided by 3. So with ODFL maybe being the leader, but I mean those three, I don't know. I think they're like the article said, I think self-driving is going to be a high priority. Um yeah, I like that. I like it. I like pegs. I like Wern. I like ODFL. And I like KNX. That makes me crazy. That's a lot of trucking right there. But let's move on. I apologize. Okay, SBGI, Sinclair. Oh God, I'm so sorry. Okay, they do 3.41 billion in sales. That is no Apple. However, let's just take a big look at the bigger picture. They are just a company in decline. Their prices are back to 2013 levels. Um, very undervalued. What's going on? Nobody's buying down here. Net income went from 2.6 billion to 250 million. Total revenue is going down. What's going on here? This thing has been freaking flat. If you bought this in May of 2013, you're down. That's horrible. This is a pass. Okay. So I got that stock from originally looking here. I guess we could look at TGNA Broadcasting. I mean, it's not, no. I mean, there's no Apple. There's no company that's in even close to what Apple was. That's crazy. Apple back then was at 405 billion, and today there's more cash in the system than ever. And this is the best we got. So freaking crazy. Um, insane, insane, insane. We're gonna save this screener right here. Screener, and we're gonna save. And this is gonna be $16 Apple scan. Oh wait, was it Apple? Okay, let's save it. What did I change on here? Oh, the debt. Was it the debt? Let me see. Um, what was this? Oh, trucking again. Okay. Yeah, trucking. Okay. Okay. Let's open the Apple one really quick. I forgot what I took off. I think it was the market cap. Yeah, I took off the market cap. It was restrictive. Um, yeah, I mean, Apple, if I'm gonna need a scan for this, like at least uh once a month at least. I mean, are there any companies? Let's reset everything. And let's just look at the largest market caps right here. Apple's the number one market cap. That's crazy. Okay. So we're going to look at 400. Let's look at 100 billion to 400 billion dollar market caps. I guess 200 billion and more. And let's go here. Okay, so we do have some potentials, you know. And I mean, Apple, like their PE and their forward PE were so strong. Okay, let's skip that. Let's look at gross margins over 40%. Over 40%. Let's look at sales past 5 years. Over 30%. Fudge. Wow, okay. Um, let's do EPS over past 5 years. EPS growth past 5 years was over 30%. Okay, if we got one, let's just check it out. Did they get bought out or something? No. Okay. Price to earnings a little bit overvalued. Future means it's kind of close to where it is now. Yeah. Strong. Very strong. They pay a 2% dividend. Let's see AVGO over the last 10 years. And let's look at it here for inception, AVGO. Nineteen 1995. Okay. And let's look at a new sheet. All right, and we're gonna go to, let's look at total. Average is 18% from 95 to this year. Last 10 years is 40%. Very cool, very cool. And what else was I looking at? Wait. I gave you the wrong information. AVGO. I lied. It was not 18%. One moment, please. 2009, that's it? That's as far as it goes back? Why is it not that long ago? It's not going to show me. So yeah, so this is going to be really high. 33%. That's crazy. Showing 40% here. Why isn't it? Oh, 2023. Is it because we're still in 2023? Okay, yeah. So 2023, it's been a banger. Let's see year to date. 43% year to date. Crazy. So yeah, this one is a banger, obviously. Jeez. Um, yeah, this is a big winner. Um, it's at 35 billion in sales and not stopping anytime soon, it looks like. Revenue, just a monster. Net income, a monster. wow, 12 billion cash and adding assets 18.5 billion, liabilities 7 billion. So that's a 2-to-1 ratio there. Very cool, very cool. Okay. Well, I think we might have found maybe our potential Apple stock is AVGO at the very end of the whole thing. So yeah, I'll check back on this once a month. And yeah, I hope you guys enjoyed this video. I'm sorry for how long it is. If you made it this far, please hit the subscribe button, and I'll see you guys next time.